Hi, I'm Rob Mitchell with the Oil Trading Room and IndicatorSmart.com. Thanks for joining me today for our presentation using smart patterns to capture high percentage win rates, keys to capturing 80+% win rates. First off, before we go there, I want to cover the CFTC disclosure. Past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Topics I'm going to cover today include finding where traders are trapped on the wrong side of the market and exploiting it to your benefit at a high win percentage. Introducing the trap trader oscillator, smart momentum, smart breakpoints, and the smart Renko price bars. And how to get even more success. I'm going to give you some more resources also during this video. And I'm going to show you the results of this trading system with trade markers. Now the pattern I'm going to show you today is called the stretched trading pattern, and it's just one of many trading patterns that you can benefit from IndicatorSmart.com and OilTradingRoom.com. So the nature of trap traders and how to benefit from it. Markets are fundamentally driven by supply and demand factors. One group of traders fades the market against trends, while the other's stronger group exploits the price discounts created by that group to get into trends that pay. Markets trend on low volume, contrary to popular belief, because that minority that wins ultimately controls the trend by trading against the larger group that is wrong. When the group that is wrong discovers they're wrong, they're forced out of the market by stopping out or ultimately trading in the other direction. At these points, the market makes stronger and more abrupt moves, typically in favor of the controlling group. So following this, the market repeats the cycle by trapping the larger group to be on the wrong side, creating what we call a trapping cycle. This video is really about getting on the right side of that trapping cycle. Every trader with any amount of experience understands the trapping cycle as they've been naturally caught in it many times. And the trap trader oscillator shows you where traders are on the wrong side or stretched too far in the order flow, while the smart momentum that we're going to cover in a minute shows you where traders are on the wrong side or stretched in price. When both cases are true, the market will normally reverse further following a reversal bar on the smart Renko price bars, which structure the market in a way that you can see the patterns easily right on a chart. These bars are vastly superior to other kinds of price bars for this type of trading application. This video is about ways to get on the right side of the trapping cycle with a high win percentage and win rate and change from being a majority to a minority that wins. In order to do this, we're going to trade with the trend and encounter trends by trading where the market is stretched in a direction, both in order flow and with the trap trader oscillator and with the momentum. And I'll describe in more detail as we look at a chart in just a moment. Then we're going to look at breaks of the prior TTO or trap trader oscillator lines, traps that give us a discount to enter, and also describe when we'll look at the chart in a moment. This approach is short-term oriented with relatively fast movements in price and finds out about 15 trades or so per day on average, making it fun to do, profitable, with a high win percentage that puts the trading edge on your side and on the right side of the trapping cycle better than 80+% of the time. By the end of this short video, you will see, understand, and know this powerful stretch pattern. Well, let's take a look. This is a chart of the stretch smart patterns trading pattern that I have marked on the chart, and you'll see the bars that I have on here are called the smart Renko bars that I described earlier. These bars have two different bars on them. One is a little bit longer. You'll see where the arrows are as marked by trade markers, a testing system that we have. You'll see that those bars are bigger than the bars that come immediately before them by double the size. Yeah. And when you get those, well, the pattern sets up. Typically what's going to happen is you're going to get some continuation following. So what is this pattern? Well, let me just pick this one right here at 745 on the chart. You'll see that the smart trap trader oscillator is below a prior line that's coming forward from the smart breakpoints. There's just a line there, and the market breaks below that level. And you'll also see at the same time at 745 that the smart momentum had also broken through a line. When that pattern sets up, we take the next reversal bar in that direction. Now, there's two components that are happening here. This chart has things on it that you can't see just by looking at the chart itself. The trap trader oscillator is telling you that the order flow of the participants in the market is overdone. It's telling you that they've taken it too far, which gives you an edge for your entry. Yeah. And then the other, the smart momentum, has broken a line, also telling you that the market is stretched in price at that point. When both those conditions are true, the trap trader oscillator has broken through smart breakpoints, and the smart momentum has broken through smart breakpoints lines, then the market is likely to fade in the opposing direction following a reversal bar. And we can cover those. Let's start at the one at 540 or so. You can see that the smart momentum has broken above a prior line, and also the trap trader oscillator broke through a line just by a little bit there, and then you got the reversal bar and the sell there. And coming along again at about 6:58 a.m., the trap trader oscillator was below the smart breakpoints. The smart momentum was also below a line, and found a buy opportunity right there. Yeah. The trade markers are showing you that there was 30 ticks of gain on that trade. Yeah. Then we come up to just after 7:12 a.m. The smart momentum was above a prior breakpoints line, and the trap trader oscillator was stretched out above two prior lines in that particular case, and a sell on the reversal bar going short right there. And the market comes down to about 745, the one we already covered. You had a double break. You were below two prior lines on the trap trader oscillator, and you were below two prior lines on the smart momentum, and the market came up from there. Yeah. And coming along to just after 8:32 a.m., you get the same condition. Trap trader oscillator broke through the smart breakpoints line to the downside, and then the smart momentum had also broken through the prior, and the market came up from there 30 ticks plus. Yeah. And we came up to the high there just after 8:49 a.m. The smart momentum had gone above a prior line, in fact above several of them, and the trap trader oscillator was above several of them also, and that particular one was wrong and ended up being a loser. Yeah. And we came down, we got a pattern on the bars that we call railroad ties. You have 4 consecutive reversal bars, while the trap trader oscillator broke through a couple of lines going down, telling us that traders had oversold that. And then the smart momentum came below a line and triggered a long trade going up. Yeah. And then we got another one there just after 11:26 a.m. We had broken the on the trap trader oscillator, and we had also broken on the smart momentum again, and another trade. It's a very simple trading system to use. You are stretched in both order flow and momentum at the same time. And then I'm going to show you some results for this over about a month of time and a large number of trades. This is the report from trade markers, the stretch system. Simply any reversal bar following line break on both the trap trader oscillator and the smart momentum. Now I have 3 positions here. Position 1, position 2, position 3. You can see them. The profit target for each is simply set at 5, 10, and 15 ticks with a stop loss of 20. You can see on the first target, the 5-tick target, is 87% to win. There's 947 trades. It's a large sample size, very large sample size. Anytime you get a large win percent like that, with a large sample size like that, the probability of it failing is extremely low. On the second target to 10 ticks is 76%, and on the third one to 15 ticks is 61%. Now you can choose to trade just 2, 5, 6, 7, 8, 9, 10 ticks in there and just scalp out of it. So often I will do that in my trading. Or you can consider what's presented here in this report to trade each of these targets going up. It nets about 33,000 after commission over the period of a month. Yeah. Well, it goes from January 2nd to February 1st. You could also choose to trade more lots. You could trade 3 lots on a 5, or you could trade 3 lots on a 10 and not trade the others. Any way you want to slice it or dice it, you could approach the system that way. Very often, what we might do is trade more lots on the 87%, trade fewer on the 10, and then trade some on the 15. This particular system is most optimal at about 10 ticks. You can see if you look at the numbers on PL1, PL2, PL3, the 5-tick target made about $79.50 after expenses, and then the 10-tick target made close to double that. But then you can see that the amount that it increased on the next one has dropped off quite a bit. It only gains you an extra couple $1,000. So in fact, you're probably better off trading this in some combination of the 5 and 10-tick targets. Yeah. Now this is the same report, and then this is a total summary from trade markers for this. Again, about 33,000. With all 3 targets, the overall win percentage about 70, and profit factor about 1.89. Average winning trade about $280. Average losing trade a little bit bigger than that. Max consecutive winners 9, had as many as 5 consecutive losers. That'll typically happen in some kind of consolidation. Now, when I mark these trades out for you, I'm not using any kind of discretion as to what are the better trades or the worst trades or anything else. It's just marking them without any regard to the trend. So there are trades that will occur that are in really strong trends against you. I'm going to show you some more resources so you can do even better with a system like this. And let's take a look at how consistent it is over time. You can see in the second column there's the net profit by day. This is for the whole month, from February 1st until January 2nd to February 1st. And you can see that out of those days, there are 2 small losing days. Yeah. 2 small losing days. Very consistent. Let me tell you a little bit right now, what is the Smart Patterns trading system? The components that I'm showing you, the chart that you're looking at, is the Smart Patterns trading system, which is a flexible intraday trading system that catches moves in both directions, up, down in trend and counter trend and scalping. It uses patterns in price action. That would be the bars, yeah. Momentum would be the smart momentum, and order flow, the trap trader oscillator, to find low risk entries with a high probability for follow through, often exceeding 85%, as you had seen, particularly in the scalping. Yeah. It's flexible, so it can be organized to fit your own personal trading style. I've found over the years, I've trained thousands of traders, that it's very important that a trader can make his own the method that he's using to trade. In fact, if he doesn't, it's a big problem. So it's real important that you can organize things to fit your own personal trading style. The system works in any reasonably volatile market. I've shown you this on crude oil because that's what I personally trade. And we also have trading rooms in other markets. There are tens of thousands of hours of member use and refinement on the system. And it's a lot of fun to trade this way. What's another resource that I have for you is the oil trading room. The oil trading room is a trader training ground for learning advanced trading techniques such as the stretch system that we're looking at here. There are many other kinds of systems and approaches that we teach in the trading rooms. And as I said, tens of thousands of hours of member contribution leading to refinement and advancement in this trading system. In fact, the growth and advancement of this technology has just been phenomenal over the 4.5 years or so we've been doing this. So if you want to learn and benefit from the smart momentum and the trap trader oscillator and much, much more than the oil trading room, is definitely something that you want to check out. And I'm going to give you a special offer for doing that. I'm also going to give you a special offer for that with the Manifesting Your Future course. And I'm going to give you a link to that in just a minute. So, but the benefits for the rooms and the benefit for the system are way too numerous to mention here. Now, many of the trading patterns we teach have even better statistics than what you've seen here. So to get the Smart Patterns trading system tools, you can do that at indicatorsmart.com. You can get advanced live trading at the oil trading room, where I lecture for 2 hours each day on these kinds of patterns and a whole lot more. So do it. You'll like it. Thanks for joining me for this short video on the stretched trading pattern and how to benefit from it. In order to learn more, I've made a page for you with all the details that I've marked out here and more resources than that at indicatorsmart.com/stretched. indicatorsmart.com/stretched. So go there and check that out and any resources. If you have any questions, feel free to reach out to me. I'm happy always to help you out and get you the resources you need to be successful. indicatorsmart.com/stretch. Thanks for joining me today for this using smart patterns to capture high percentage win rates in a market. We look forward to seeing you with the system and in a room. Thank you.